Imagine waking up, brewing your morning coffee, and casually checking the global Forex screens as you do every day, when suddenly your heart just stops. There it is, clear as day, a figure you've seen in countless forum discussions, in whispered hopes among fellow investors, a number that has become almost mythical in its promise: 0.86. The Iraqi Dinar, trading not at its usual minuscule fraction of a cent, but at a staggering 86 cents. For a single dinar, your mind immediately starts racing, doing the frantic math. If that rate were to hold, if this is real, then the investment you've been holding on to for years, that stack of Iraqi dinar notes in your safe, has just multiplied in value by a factor of over 1,000. This isn't just a minor blip or a graphical error on some obscure financial website. This is a major spike being reported simultaneously by Forex traders in London, Singapore, and New York, a coordinated surge that has sent shockwaves through the entire niche community of currency speculators and dinar holders. The question on everyone's lips, the question burning in your own mind right now, is a simple one. Is this finally it? Is the long-awaited revaluation, the legendary RV we've all been praying for, actually beginning to take shape in real time right before our eyes? Let's not just get excited, let's get analytical. Let's break down exactly what is happening behind this monumental number. First, we need to understand that these flashes on professional trading platforms are not accidents. They are the direct result of buy and sell orders being placed. And for the Iraqi dinar to momentarily achieve a rate of 86 cents, it means that a massive buy-side pressure was applied. Pressure so immense that it temporarily overwhelmed the entire existing market valuation. Think of it like a dam finally cracking the water, representing the true pent-up value. Forces its way through. Who or what could generate that kind of buying power? We are likely talking about institutional level moves, not just retail investors like you and me. This is the kind of capital that moves markets, the kind that acts on insider information or ahead of a major public announcement. The chatter among financial insiders right now is absolutely electric. They're pointing to a series of clandestine meetings between the Central Bank of Iraq and the International Monetary Fund. Meetings that have been deliberately kept out of the mainstream financial news cycle, but have been meticulously tracked by dedicated currency analysts. The whispers suggest these talks have centered on one thing, and one thing only: formally re-pegging the Iraqi dinar to a basket of strong currencies and commodities, specifically to Iraq's vast and largely untapped oil and natural gas reserves, a move that would fundamentally and permanently revalue the currency to reflect the nation's true economic wealth, not the artificial war-suppressed value it has held for decades. This isn't just speculative fantasy. This is a documented economic strategy for post-conflict nations ready to rejoin the global financial stage. And the global reaction, it's already starting. From the gold markets in Zurich to the bond markets in Tokyo, there's a palpable tension, a recalibration happening as major financial institutions are forced to acknowledge that Iraq, with its immense natural resources and strategic location, is no longer the economic pariah it was once considered. For you, the investor holding IQD, this is the moment your patience was for. This potential revaluation is not about getting rich quick. It's about a global financial correction, a reset that acknowledges the gross undervaluation of an asset for far too long. It's about an entire nation's currency being realigned with its tangible real-world wealth. Seeing that number 0.86 is the first visible, tangible crack in the old system, the first hard evidence that the world is beginning to trade the dinar not for what it was, but for what it truly is and always should have been. So, what happens in the minutes and hours after that staggering 0.86 flash appears on the screen? The quiet, methodical world of international finance doesn't just erupt into chaos. It transforms into a high-stakes detective story where every piece of data is a clue, and the fate of your investment hangs in the balance. Let me take you inside the war rooms of major trading houses right now, where the atmosphere is thick with a mixture of panic and unprecedented opportunity. The initial shockwave of that rate spike triggers a cascade of automated trading algorithms, systems designed to liquidate positions or buy up assets at speeds no human can match. But this time, something is different. The algorithms are conflicting. Some are reading this as a catastrophic error, a glitch to be arbitraged away, while others, more sophisticated systems plugged directly into deeper liquidity pools, are interpreting it as a legitimate market move and are frantically buying up every available IQD-denominated asset they can find. This isn't a simple software error. This is a fundamental clash of market intelligence, and the fact that multi-billion-dollar systems can't agree on what's happening tells you everything you need to know. This is real, this is structural, and this is just the beginning. The real story, the one you won't see on the mainstream financial news networks that are still focused on the Dow Jones and the S&P 500, is unfolding in the encrypted chat rooms and on the private satellite feeds connecting currency traders in the Middle East with their counterparts in Asia. The intelligence flowing from these channels is crystal clear. The Central Bank of Iraq has not been idle. Their latest currency strategy, long shrouded in secrecy, is now being activated in plain sight. It's a multi-pronged assault on the old suppressed valuation, starting with a dramatic, covert recall of large denomination dinar notes from the international market, a move designed to create artificial scarcity and drive up the underlying value by physically reducing the currency supply and circulation. Simultaneously, the CBI has been strategically deploying its foreign currency reserves, not to defend the old low rate, but to aggressively buy back dinars from the open market, a stunning reversal of traditional monetary policy that signals one thing: a deliberate, government-sanctioned effort to strengthen their national currency. They are engineering the revaluation from the inside out, and the global reaction to this potential reset, it's already creating geopolitical shockwaves far beyond the Forex charts. We are receiving verified reports that the Chinese yuan, which has been increasingly pegged to Middle Eastern energy exports, is showing unusual strength against the US dollar, suggesting that Beijing is positioning its own currency to benefit from and stabilize a new, stronger Iraqi Dinar as part of its broader strategy to challenge the petrodollar system. Meanwhile, in Europe, major banks are quietly and frantically recalculating their exposure to Iraqi debt, realizing that if the dinar revalues, Iraq's ability to pay back those loans skyrockets, turning a once risky bet into a goldmine. For you, the individual investor, this intricate global chess game translates into one simple, powerful reality. The ground is shifting beneath the entire global financial system, and your dinar holdings are at the very epicenter of this earthquake. The patience you've held through years of rumors and false starts was not in vain. It was a strategic positioning in a global asset that the world is only now beginning to correctly price. The 0.86 was not the finish line, it was the starting pistol, the first undeniable signal that the revaluation is not a matter of if, but when, and the countdown has officially begun. The old financial order, which for decades has undervalued Iraq's true potential, is crumbling, and a new one built on tangible assets and fair valuation is being born right before our eyes, and you, by holding IQD, have a front row seat to the most significant wealth transfer of our lifetimes. Now, let's address the single most critical question burning in every investor's mind at this very second. What do you actually do right now? The screens are flashing, the intelligence is confirming a monumental shift, and the world is quietly but irrevocably repricing the Iraqi dinar. So where does that leave you personally, with the potential for life-altering wealth now staring you directly in the face? This is the moment where and strategy separate those who see a dream from those who secure a legacy. First, you must understand the psychological phase we are entering. The initial shock of the 0.86 spike will give way to volatile and deliberate climb, a period of consolidation where the global market tests the resolve of this new valuation. You will see pullbacks, you will hear mainstream naysayers dismiss this as a temporary anomaly, and you will feel the temptation to cash out at the first sign of a dip. This is the single greatest test of your conviction. Do not fall for it. This is exactly how major financial institutions shake out the weak hands to accumulate more of the asset for themselves before the true official revaluation is publicly announced by the Iraqi government and recognized by the International Monetary Fund. History is your guide here. Remember the Kuwaiti dinar revaluation after the first Gulf War. Those who held through the initial volatility and the fear, uncertainty, and doubt saw their investments multiply not by hundreds, but by thousands of percent, because they understood they were witnessing not a market trend, but a geopolitical and economic reset. Your strategy must be twofold. First, absolute verification. You must now monitor only the most reliable real-time Forex feeds from Tier 1 institutions, not the free, delayed online platforms. The confirmation you are waiting for is not another flash, but a sustained trading range establishing itself significantly above the old rate, a new floor from which the currency will never retreat. Second, you must have your exit and asset protection plan meticulously prepared right now, before emotions can cloud your judgment. This involves knowing exactly which international banks are equipped to handle a currency exchange of this magnitude, having your documents in perfect order, and consulting with a financial advisor specializing in international wealth and tax implications, because the last thing you want is to navigate a generational wealth event with outdated or incorrect information. This is not just about making money. It is about transforming your entire family's destiny, and that requires a level of preparedness that matches the historic nature of this event. The information you have received in this very video is the key that unlocks that door. It is the intelligence edge that 99% of the world does not possess, giving you the clarity to see through the noise and act with precision and confidence. The journey that began with a hope, with a belief in a nation's recovery, is now culminating in a tangible financial reality. You are no longer just a spectator or a hopeful investor. You are an active participant in a global financial revolution. The path to securing this future is clear, and it requires one final, decisive step from you.